Manoj Nerurkar joins in, who's the CEO of Syngene, for a detailed check on how business is shaping up on the sidelines, of course, of the Access Rising Stars conference. Manoj, it's great to have you on the show. You know, the company has added about 7 long-term contracts in the past 15 months. Will the benefit of that accrue in FY19, FY20, you think?
Yeah, so benefits will definitely start accruing because these are the contracts that we have either newly signed or we have extended from the previous contract into a new one. Some of them have been expanded, not just extended. So if you look at all that, these benefits will start accruing from the current financial year.
Okay. Hi, Mr. Nerurkar. This is Mubina as well joining in. Can margins see a drop in FY19-20? Because, you know, there may be that element of Forex. There's also the cost relating to the start of the API facility, which will come by in FY20. So would that put pressure on your margins?
Well, as far as Forex is concerned, all our long-term contracts we actually hedge. Therefore, we shouldn't see any Forex related impact on the margins. Even in the past, if you look at our performance, there has been Forex volatility. However, we have been able to maintain our margins as per our historical trend and better than the industry average. And we look forward to maintaining those margins as we go into the next year and the years after. Of course, the new API facility which is coming on board, which will have some depreciation impact on the overall performance. But we again hope to continue to maintain the margins within the range that we have by making sure that as the facility comes in, the business also comes in, and thereby we are able to maintain those margins in the future.
Okay, GSK is an existing client with whom you have signed a strategic deal. Could you tell us a bit more about it, how it's going to be ramped up in, say, the next 1 to 1.5 years?
Yeah, so GSK is a very important strategic partnership for us. Under this partnership will help GSK further their NCE, the new chemical entity discovery, and several programs that will enable them to come up with new medicines. So it's not only important strategically because it increases the business for us, but its impact on the patient's health in terms of developing and discovering and developing new medicines is of significant importance to us. We are ramping up quite nicely in terms of the team that we have put together, and that team will continue to grow as we add more and more discovery programs to the overall collaboration. And of course, it will have an impact on the Syngene's top line when it comes to having this collaboration with us. So we are very excited about it, and it is something that we hope to grow as we continue this collaboration and get some successes under our belt.
Right. You know, Syngene is currently undergoing an investment phase across business verticals. When can we see the benefits of that coming through?
The business is quite capex intensive. We need new laboratories, we need new plants, we need new infrastructure, because the unit of operation, if you think about our CRO business, is a scientist working in the lab, putting science to work for our partner. And therefore, if you look at the business growth, that means the number of scientists doing this work have to grow. These scientists are going to require a laboratory space or a plant space where they will work. So throughout our history, and what we'll continue to see in the future, is growth in our infrastructure, for which will require capex. So it's nothing different than what we have done in the past. We will continue to add new facilities and therefore require new capex. But the benefit of that comes from growing business and adding more collaborations. As you have seen in recent times, we have added several collaborations, and the impact of all this will be on the business top line as well as bottom line. Of course, as you know, sometimes capex does go ahead of the business that comes in, but so far we have been able to manage this quite successfully. So we hope to see a continued trend in terms of our ability to invest in new business, new infrastructure, and yet bring business in to grow the top line as well as bottom line, and therefore maintain margins.
How is Syngene best placed to gain market share in CRO and benefit from offshoring, you think?
Yeah. So you know, there are few trends that are worth discussing. One is, if you look at the R&D budgets of pharma companies, they are either stagnant or they are shrinking, and therefore the pharma companies are looking at ways to get more work done with some bit of cost advantage, where companies like Syngene do come into picture. And therefore, if you look at while the R&D budgets are stagnant, the outsourcing growth rate is quite significant. The reason behind that is what I just said, that companies are, instead of doing research in-house, they are outsourcing that research. So that's one part, very important trend. When it comes to Syngene, now we are the largest CRO in India today, and therefore we have a significant market share in terms of the overall outsourcing in pharma industry that happens in India. Also, our profit margins are industry leading margins. So we believe we are quite well poised to continue to grow our market share and maintain our leadership position.
Thanks very much, Manoj, for joining us. Manoj Nerurkar, their CEO of Syngene International, clarifying on the growth potential of the business and the road ahead really from here on.